every single person on your team is working in a fiduciary capacity with a desire first to protect their profession, and there's no communication amongst people on your team, it's not copacetic, and there's always somebody that's hurt, and it's always you.
Welcome to The Conscious Investor. Let's get started. Conscious investors, welcome back. Oh my goodness, you are in for the biggest treat of your life because you've heard me speak about tax planning and strategy. You've heard me speak and actually say, hey, you should go check out Modewealth in the past. Go listen to a whole bunch of episodes. You will see it's a consistent theme. I reference Modewealth on an ongoing basis. But this is the first time that I have ever had Melvin and ever featured Melvin on the Conscious Investor podcast. And you know what? I don't think there could be a better time to do this than right now, because some of you, bless your hearts, some of you have not been looking at your taxes in the best way. And you know what? I used to be like that until I started working with Modewealth. My husband and I would just go and file our taxes. And then we found a better strategy. And now we actually plan our taxes out. So we're going to talk about all of that. And I want you to keep in mind as we're talking about this concept of, okay, some of you have not been planning all year round, and some of you have, maybe caught some nice tailwinds this year, and now you're freaking out because you're going to have a lot of taxes. So we're going to dive into that topic. We're going to dive into also protecting your booty, because you know what? If you're not structured with the right entities, you could really set yourself up for a tremendous liability. But I am not the expert. And that is why my friend and partner, because you know what? I work with Modewealth, meaning they manage things for my family. And I cannot think of anybody better to take care of the Holly family. So without any delay, Melvin, welcome to the Conscious Investor.
Thank you. Thank you very much. That was literally the best introduction I've ever heard in my life. So I appreciate it.
Man, I'll tell you what, every step of the way. So we've been with you now for almost 2 years.
Yeah. Almost 2.5. Yeah.
Right. And I'll tell you what, I think I've been raving even more about our experience with Modewealth, because you'll recall that last year we found ourselves needing to change entities.
Yes.
And we didn't realize that. But I'm so grateful that we didn't have to do all the thinking, and that you were there and the team was there guiding and directing. Next thing you know, I'm like, oh, I feel like I didn't even do anything. Next thing you know, you changed our entity and we saved a lot of money on taxes.
Quite a bit. Yes.
Quite a bit. So anyhow, Melvin, I could go on and on about Modewealth because it's such a unique setup. And before we dive into all of our hot topics, would you mind just sharing some of the things that you love about what you've built, with Modewealth?
Yeah, absolutely. So Modewealth is 9 years old now, and we started for similar reasons to why people enjoy our process so much. I went to my accountant, and it was one of the first years where I had very, very decent income. And so I go to my CPA and walk into his office and I said, hey, I was on YouTube. I heard this thing about this really cool strategy. And he looks me dead in the eye. I've been with him for 7 years. And he says, yeah, we can help you with that. And I thought, okay, well, why didn't you tell me about it? Because apparently it's going to save me multiple thousands of dollars. And his words to me were, that's not what we do. And I'll never forget. Oh my gosh. Never forget that. And that started me on this process of interviewing accountants, CPAs, enrolled agents, and just really discovering that most CPAs and enrolled agents are what we would call, deputized agents of the federal government. Essentially, it's not their job to help you save money on taxes. It's their job to ensure that you actually pay taxes. And so with that, the vast majority of them are very, 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 very reactive in that they just simply give the information that you give to them. They prepare a return or whatever it is. And then most of the planning for most of these firms is relegated to end of the year tax planning, which means what can we do in the rear view that we hadn't talked about all year that we can do last minute to help save you money. Now, there is such a thing as end of the year tax planning, and that is part of our practice, but you have to get windshield strategies, things that are forward thinking, primarily if you're in the investing world or you're an LLC or looking to be any of those things, because there's so many aspects that can put you in trouble. So so our firm, Modewealth, focuses specifically on business owners. That's all we work with exclusively. And we do everything from entity setup, bookkeeping, payroll, anything you can think of that you would potentially need to grow your business from a standpoint of focusing on what it is that you do best, we can help you with. But our bread and butter is real estate professionals, just because we get them. We get them very much, which means that we know how flighty sometimes and how unorganized, but also how ambitious and absolutely.
That stung a little bit. No,
I wasn't talking about you. So again, and I come from that very space, so I can speak from it because I was it. So with our knowledge of real estate, we procured over 34 CPAs that work primarily in the real estate space who have an absolute unique understanding of your business. So by way of that, we can help you implement strategies, save money on taxes, whether you're working with us as your CPA or if you're working with a CPA that you trust on your team.
I love that. Now, I'm going to provide a little clarification here because some of you amazing conscious investors, you're listening and you're like, well, I'm not a real estate professional yet, or maybe I love my W-2 and I'm going to stay there, but you have investments. And you have real estate, you're passively invested in lots of assets. So really, you do have the real estate business. You might not identify it as that, and you might not introduce that, it might not be in your byline and things like that. However, viewing yourself and your situation in the correct way is going to help support you with your taxes. And what you were saying, I just got to double down on that, man. We paid, this is in, 2011, maybe, we paid at least $40,000 in taxes. And that was in addition to all of our quarterly payments that we'd already put in because we just went to a CPA that we had trusted. And it's a good person, but that CPA was exactly what you described. This is just how we do it. And unless we had gone and said, oh, we saw this on YouTube or we found this information, tell us more, we didn't even know what we were looking for. And I think most people out there don't know what they're looking for. And they don't know that there are options out there. And so I know if we were working with Modewealth back then, if we had known about it, I know we would have been investing that money, which is so sad.
I think the assumption is that a CPA or an accountant is going to take care of you. And I think that's an assumption that a lot of people make. It's just not the case. But it's not to put a CPA or anyone down. It's just to speak to the fact that that's not their profession. It's not what they do. And typically you think of it two boxes. And so on one side, you have the accountant, the bookkeeper, or payroll or something along those lines. Those are really, really non-strategic individuals. And then on the other side, you have a tax advisor, you have a tax attorney, right? These are individuals that would focus primarily on strategy and making sure that we do a deep dive into your individual business and personal situation. And the reason why CPAs can't do it is because it doesn't pencil. It doesn't pencil. They get paid on billable hours, and it creates this dynamic where it's too expensive for a client to call and get all the information that they need, let alone implement those strategies, a lot of it, which is legal in nature. So it just makes it to where it's difficult to do. So that's what Modewealth has done is we've been able to procure a process that takes big time Rockefeller, type strategies and implement them in a scalable and duplicatable way for the small business owner.
I love that. So I'm going to be very direct. It's a membership model.
Mm-hmm.
I had never experienced that before, particularly when it comes to financial services. I'm like, wait, I'm just going to pay my monthly dues and it's going to just have everything included that I could possibly need. Mm-hmm. It seriously is so incredible to just know it's being taken care of. And I'll tell you, especially after last year, Melvin, when it was a matter of switching entities and just being so much more nimble and strategic throughout the year. And even this year, we've already had a conversation. Hey, this is going to happen. I think this is how much money is going to come off the sale of that. It's like, and I don't have to be afraid to call and be like, oh crud, I'm going to get a big fat bill. We're on the same team. We're partners. We are collaborating for the same purpose. And I love that.
Absolutely. And it's not just me, of course. I always tease and say, I'm the least intelligent person in the room in my business, just because we have attorneys and, all types of people that are far more knowledgeable about subjects. But I am personal liaison with most of my clients, meaning they call me personally and we direct them in whatever direction they need to go.
I love that.
So you do talk to more than just me, just in case you get sick of hearing my voice.
It is true. It is very true. But you have a great voice. I mean, hey.
Thank you. I get sick of hearing it.
So. Oh, I love it. Well, can we go ahead and I think some of these people, some of our listeners are thinking, oh my gosh, Julie just said it. I didn't realize that this passive investment I was in was going to sell, but they're selling, and now I'm going to have this huge chunk come my way. Dear God, what am I going to do? And again, we don't like planning, looking backwards. We want to be looking forward, but sometimes these things happen. And so can we give them some guidance or encouragement or tips?
Yeah. So first, it starts with entity, right? So we want to make sure that we're in the right entity, and that's relative to how much income you're going to receive. And if we're talking about a syndication, or an unlimited partner, we're talking about you receiving distribution checks. So depending on whether they're monthly, quarterly, annually, of course, is up to the agreement. But then, of course, there's the disposition and there's the capital event. So from a taxation standpoint, you just want to make sure that you're not opening yourself up to specific liability, which starts with the entity. But also we pair the natural benefit of a syndication, right? So if we start talking about benefits of a syndication, let's just break those down, right? Strong cash flow, right? Upside through appreciation, which is important. There's obvious tax benefits. There's depreciation of the asset itself, which creates an additional tax benefit. And you're taxed as a passive investor, which is also amazing. So there's also some security in the asset class itself because real estate typically outperforms. So there's all these really wonderful things that come by way of your choice to do syndication, if I'm speaking in terms of that example. But then what we've got to do is we've got to match that with what we call workhorse strategies that we pair with all of those natural benefits that's moral, legal, and ethical and compliant with the law. So we have these really, really cool things that we can do. Some of you may have heard of, you can do things such as hire your children. You can create an executive lease agreement. You can do an accountable plan so that you can write off pretty much everything that you can't with S-Corp law. So we outline and create a platform for you to be able to not only do those things, but do them very easily. So that means you wake up, you go to work, you do your thing. And as long as you can dedicate, what would you say, Julie, 5 minutes, 10 minutes a month, maybe, to filling out documentation that you would need to do anyway if you're going to, be compliant. Because, when it comes to the IRS, it's not about what you're doing, it's about what you document. And of course, your knowledge of the law and the professionals that you trust to keep you square. So we handle that for you so that if the IRS were to ever come knocking, then we'd be able to provide you with the information, of course, to be well beyond reproach. So it's not just about the strategies themselves. It's obviously about the proper documentation and education, and then having a team that can help you get there, which is exactly what we do.
Yeah. And I love it. We get these text reminders that, remind us that we need to, fill out our kids' time hours and things like that,
Yes.
and it's good. It's good to have that nudge because let's face it, we're busy in the day to day. We're busy. The purpose, we might be working, but we usually do most of those things so that we can have time with our families and contribute to our communities. And so I don't want to have to be thinking about all of these other, did I do this? Did I do this? So having little reminders, super handy, very, very helpful.
Absolutely. And if something gets crossed and you got a question, just give us a call and we'll get you back on track.
Yeah, this is true. Now, I realize that I think some people may not. You and I are comfortable with this term entities.
Yes.
And I should have stopped us earlier and said, maybe let's clarify that because I know not too long ago, I didn't really understand what that meant in this specific application. Right. So let's describe that.
I love it. Yeah. So when most people, I guess the best way to describe it is that every person is an entity. People don't realize this, but as an individual, right, you're an entity. But if you were to create an LLC, that is also an entity. And entities simply are describing the way the IRS taxes you for the most part. So as a sole proprietor, you're taxed under your LLC, or even if you're a single member LLC, limited liability company, you're taxed as what's called a disregarded entity, which means that you're taxed on your social as well. Saying that to say that when dealing in real estate, a lot of times it's important to understand how to create what's called a corporate veil or veil, depending on the entity type. All that means is how can I separate the liability of losing my personal assets because I chose to invest in a particular investment. Syndications are interesting and really cool because they're non-regulated investments as it pertains to the SEC, which creates some level of inherent liability, which means that you need to make sure that you're structured in a way that you can prevent your personal assets from being basically confiscated during a charge or something else of that nature. So what we do is we put together LLCs, not just LLCs, but depending on the amount of revenue, depending on the amount of passive income that's being created, maybe it's an S corp. Maybe you're doing this with someone else. Maybe it's a partnership. Can we look at ways to avoid state taxation? Can we do this as a Delaware corp? Can we do this as a Nevada potentially corporation? And so all those things come into play based on the syndication, based on the type of opportunity to have access to. But we make sure that under no circumstances can your personal assets be confiscated. And even in the event of a charge order, meaning you get sued or something of that nature, we show you how you can move money from your LLC to your person and still avoid that order. Because the only way someone, say you get sued, can access money inside of an LLC that we set up is if you take a distribution. So we educate you on how to, and we provide you with the paperwork and everything to do something in that case, which rarely happens. But when it does, to take loans from your LLC or to figure out ways to get cash flow while avoiding the liability of the money that you've created within that LLC from being confiscated. So it felt like a lot of big words.
Well, I love it because it's like, there are times we want to be on offense and times we want to play D. And yes. It's understanding and partnering with a professional firm that, allows you to play the correct position at the correct time. And that's extremely well said, because I think that's really what we want to do is all that stuff that I said are things that we would implement for you, right? To prevent, based on your personal situation, you from having to deal with the liability of not doing so. Mm-hmm. So that's where my attorneys come into play and in putting that paperwork together from an entity standpoint. And just to be doubly clear for you amazing listeners is that Melvin just said, oh yeah, the attorney will take That's part of that
Oh, yeah,
membership. That's part of
That's
everything.
Part of our firm.
The firm is everything. And that was really why I gravitated towards Modewealth when my husband and I were looking. It's like, oh, wait a second. So wait, we're going to have all of the professionals talking about our file, planning for us instead of us having to go and interview and plan and figure out everything. It's so nice to know. It's like going to a room full of doctors. If you have some disease or something and you're going to different doctors and they're prescribing medication and it doesn't even, they're going against each other maybe. So it's so nice in this regard to go where everybody's talking about our file. They all know the plan and they're in cahoots on our behalf. Like, I love it.
Yeah, there is always, that is extremely correct. There's always this instance where, let's say your life insurance guy has this view. Everyone's supposed to be knowledgeable in their particular field as it pertains to the tax consequences. But what you'll find is that insurance guys want to sell insurance and wealth advisors want to get your assets under management. Accountants want to delegate liability as it pertains to all those other things and just get your taxes done. And what that does is if every single person on your team is working in a fiduciary capacity with a desire first to protect their, profession, and there's no communication amongst people on your team, it's not copacetic, and there's always somebody that's hurt, and it's always you. And that's because they're protected, but they missed something. So with the holistic approach, we always say we like to procure teams. If you've got a great CPA, then fantastic. But always say, when was the last time that your tax advisor or CPA actually told you about specific strategies that are going to save you money on taxes, right? And so if that's something that you haven't talked about or haven't, been able to get out of your current CPA, then we can help. And if they are, then we can ensure that from a compliance standpoint, they're being right. Because if you don't know that you're supposed to be doing minutes meetings, if you don't know, right, that you're supposed to do employment agreements and the nuance between these strategies, we can make sure that you're doing it the right way. I
love it. Okay, so we need to make sure our entity is structured correctly.
Yes.
And now we want to save money. Yeah. Man, that investment is going full cycle. We're going to have this windfall and I want to keep it. Right? That's what everybody listening is thinking. They're like, oh, dang, I don't want to give a penny of that away. I want to reinvest it.
I want to say this to your listeners. She literally started this conversation by saying, I'm not going to tell you what I'm going to ask you. So I need to say that just because this is relatively impromptu. But go ahead. I'm ready.
So what could... Let's throw the listeners a little bit of, let's give them a little something that they can say, all right.
Absolutely.
One, first of all, I need to call and I need to schedule a time, with Melvin or one of the team members at Modewealth.
Yes.
Two, I need to, what could I do? Am I totally up the creek because I'm going to, have this huge gain?
Mm-hmm. We take money that's, that you're making, and we do what we can, of course, to receive it in the most tax-free form possible, right? And then what we want to do is we want to invest in a way that we can create tax-free distribution. And so a lot of the times we're doing things that are using different portions of the tax code that allow for this to happen. One of those is a portion of the tax code called 7702A, okay? So what that allows for, using a vehicle, which in this case happens to be life insurance, allows you to take what is considered, although it's tax planned, but post-tax money, put it inside of a vehicle to grow tax-free and then also be distributed tax-free. So if you can imagine taking money that you paid very little tax on, if any, putting it inside of a vehicle that is going to compound without risk of capital loss, and then pays to you tax-free. that is a way to ensure not just security of the asset, but also growth, compound growth of the asset, and also tax-free distribution, which is amazing, relevant to think of it in this terms. Roths are great. But Roths also have very stringent tax codes that prevent you from being able to invest in a way that you would like, right? Because you can only put in a certain amount of money. Well, if you had all the benefits of the Roth and none of the litigation or none of the tax codes that would prevent from you investing the way that you want to, but you still capitalize on market growth, well, those are the types of things that we're able to do. So whether it's tax-free retirement using life insurance, there's so many vehicles, whether it's premium financing, that's where you use OPM, other people's money, to help compound the growth. And, no matter what it is, because it can be unique and it can be situational, we always start with tax position. And here's the reason. If we can hedge your bet, meaning if we can help you invest in a way where we minimize tax liability, then if we're talking about actual ROI, we're no longer just talking about the asset. We're also talking about the money that our firm helped you create by way of avoiding or strategically reducing taxation. What was that factor? If we saved you $15,000, $20,000, $30,000 year over year after meeting us, and we take money that is non-taxed or greatly reduced in taxation, and we're able to invest that into an asset where you can't lose, or at least there's a floor. So if you're not going to get the return on your money, you're at least receiving a turn of your money, which is important. We can do what I call create retirement insurance, which is ensuring that a portion of your retirement portfolio is just not going to be negatively impacted by what the market decides to do right when you decide you want to put this thing up and retire. So looking at the whole picture, looking at what you have in qualified accounts, looking, okay, are you overfunding a 401k? Is the way that we can take this money, we can invest it in a way that helps you hedge against Uncle Sam. Obviously, we want you to pay what you owe, but we don't want you to pay a penny more. And the only way we can do that is with due diligence and looking at the whole picture, which we've basically gotten to a point to where upon onboarding and looking at your information, looking at your tax return, we're simultaneously creating a wealth plan. So that's another thing that separates us, is because we're looking at that from the very beginning. We're saying, how can we create wealth for our clients? And how can we do it in, you can be aggressive while avoiding loss. And you can do it a whole lot better if you're doing it from a tax-free position. So another question would be, if you made money tax-free and you knew that by way of meeting our firm that you're going to have a specific dollar amount that is going to be an X factor for your long-term goals, how would you invest knowing that, right? Mm-hmm. So sometimes it's wealth, sometimes, hey, I'll do another syndication, right? Mm-hmm. It depends on where you're at in your strategy and what it is that you're trying to do. But the ultimate goal is compounding your efforts and creating wealth while simultaneously reducing taxation. That's the goal.
I'm all about the reduction of taxes. And here's the thing. It's not that, and I'm going back to that because I think most conscious investors are already in alignment on this, but It's not that I don't want to pay taxes. I don't think anybody in here is like, nah, I don't want to pay taxes. I don't want, curbs and roads, and I don't want policemen and firemen. It's not that. It's that I want to pay the reasonable taxes. And then I want to stimulate the economy how I want to. I want to go and spend my money where I want to spend it. And guess what? That's going to help the economy, and it's going to help my family if I invest it. Especially when we're investing wisely, we can have tremendous impact in communities by providing amazing housing.
Absolutely. And I'll say this just because this is, you keep reminding me of things that I want to say, and this is so great. So keep in mind that the IRS benefits entrepreneurs for a specific reason. I mean, the tax code is the way that it is so that entrepreneurs have the ability to do the things that the government doesn't do. So if you look at the tax code and you say, in what areas are there tax benefits? Every single time there's benefits in areas that the government hasn't figured out a way to do on their own. So here's a better thought. If we don't do it, and if we don't take advantage of the tax code, we give the federal government a way to legislate it into a process that allows them to earn a revenue on it. So as long as we do a good job and we take advantage of these tax codes and we're moral and we're legal and we're ethical, we perpetuate the opportunity to keep doing it. Right. Based on the betterment of society, and entrepreneurs are necessary, absolutely necessary to the, economy and the, success of the United States of America, that we have to be here. So we have to take advantage of these tax codes. So we shouldn't shy away from them. We should lean into them. We should lean into them with due diligence and with as much advice and counsel from qualified professionals as possible.
I love that. Maybe a practical way of looking at that, let me speak clearly, y'all, is that we can actually look at what's happened, say, in the green energy space over the last 15 years, maybe 20 years. But there have been so many favorable tax codes. Hey, single family owners, if you put in these type of windows into your home, you can gain these taxes. This is on a very personal, individual type level, right? But we can scale this concept up and we can think, okay, great. If you buy this Prius that is, fits these guidelines, you can have this write-off, and so all of these write-offs are there, and they really do help bring about powerful change. Now, you can correct me and elaborate, because again, this isn't my forte, but I know just a smidge to make me just a little bit nutty sometimes.
No, you are 100% right. And to take that a little further, it depends on legislation. It depends on who's in office at the time, right? A lot of times, if we have a more conservative president, we're going to have laws that are protective of capital pursuits or real estate, right? And if we have a more liberal president in office, then you may see more green energy. You may see. So all of these things are, and that's, oh gosh, that's so good, Julie, because that's the other point, is that our government uses these tax codes to incentivize behavior. Okay. So depending on who's in office, it will dictate what agendas are going to be perpetuated in the tax code. So when you think about that, that also compounds my previous statement where I say we have to take advantage of it. We have to take advantage
of it while you can.
While you can, because it may change. And then depending on what side of the aisle you're on, maybe that, president's people will put you in a position where maybe you don't want to invest in that. And so good tax advice will tell you that, most people invest towards their interests, right? And so if we're in an environment where the current, president and his staff or her staff is putting us in a position to take advantage, then we need to do that as long as it's happening.
To put in a practical case, I'm looking at what's happening with bonus depreciation.
Yep.
And so you can look at that's fading away. This is our last year that we can take 100% bonus depreciation.
Right. Going down.
So year by year, that's going to change. So it's so critical to be working and aligned with a team that understands the tax code and the nuances of it so that they can guide and direct you. Because guess what? There's a reason we go to professionals. Now, I cannot understand and know. I can't. I don't want to, and I don't want to take my time to understand and memorize and know the nuances of the tax code. But by working with a professional like Melvin and Modewealth, then now I don't have to know the entire tax code. I get to tap into that resource and put my time and energy into the pursuits that I have, which you guys know, that's making content that inspires you. So
absolutely.
I love it.
that's believe it or not, I enjoy this. I don't know how. I don't know. I've talked to a lot of CPAs.
So much. You're saving people so much money. I think that I love making people money through our, passive investing opportunities, and that makes me happy. And I love creating, great housing for residents and everything. I can only imagine just knowing the gift that you give, individuals and families and businesses. Like, wow, look, now you can go do this much more with this money.
Well, you're not in business if you don't get to the point where you start to earn a profit and then you look at your check and then you realize whether you're paying quarterlies or not, and you're thinking, my goodness, I'm making decent money, but now I've got to write this check to the IRS. And I've got to do this every single year. I've also got to pay my expenses. I've also got to try to grow and try to get employees so I can continue to thrive. And then you realize that the IRS is a partner in your business that in some cases, it doesn't necessarily feel like they're providing much value. And so if you get to that point, you have a decision to make. You can either tax plan and figure out ways to morally, legally, and ethically reduce taxation so you can continue to grow, which means you can hire more employees, which means the IRS is going to make their money by way of you growing your business, right? Or you can quit. And a lot of us get to that point to where we just need to have a conversation with someone just to ensure that we're paying what we're supposed to. Because if it hurts up to write that check, whether it's quarterly or annually, then you should probably have a conversation with the tax professional that understands the small nuance of running a business.
I love it. Okay, we're going to have to wrap up here in a second, but we've been talking to one sector. I doubt that there are many of you listening that fall into this category, but I recall in my early adulthood being so excited to get a tax return.
Yeah.
All right. So, I've had a very big paradigm shift. So now I never want to have a tax return come my way, unless it's because we implemented a strategy that is retroactive and that has happened because Melvin's amazing. And so let's speak to maybe as we wrap up, the shifting that paradigm for those, there might be a few of you out there that are still like, yes, I got that tax return.
So I would say this, who's better to invest your money? You are the federal government. And this isn't a knock on this wonderful, great country that we live in. But we've gone through a pandemic. The IRS has stated they're going to add so many IRS agents, which scares most people, but tax professionals, not so much, only because if I pick up the phone now to try to get a hold of somebody at the IRS, it takes me just as long as it would take you. So a lot of the people that they're hiring so that they can catch up on the 2553s and all of the documents that they haven't been able to do. Like any other entity, you lose efficiency when you have workers working from home, let alone federal workers working from home with very low supervision, right? So I'm saying all that to say, only you can invest your money appropriately. And if you want to figure out a way to not give the IRS your money and make sure that you're keeping that money so that you can invest in things that are going to grow, that's something that we can do very, very quickly. And we typically would do that just for someone for free. We do sometimes have clients that say they have large W-2 incomes and they have a side business or a side hustle. And we help them figure out ways to invest so that they can retain more of their money as opposed to giving it to the IRS to just give back to them. Because you're going to earn month over month compound interest growth in a vehicle that you understand, in the risk class that you are, as opposed to allowing the government to make money and really just give you your money back. So if you're in that demographic, we can help too.
I love it. Melvin, this has been an absolute joy to have you on The Conscious Investor. And I know that this has got wheels turning and people are thinking, okay, I need to have this conversation. And I'm just going to reiterate, you really need to have this conversation. Like make sure that you find time on Melvin's schedule, because it's amazing how one single conversation can start this powerful domino effect.
100%. So, I'll say lastly, if it's bookkeeping, if it's just payroll, if it's tax planning, again, we can meet you where you're at. It doesn't have to be, an all-in-all package. We can procure our help to fit exactly where you're at.
I love that. And you guys have actually done that with us. We've kind of shifted our membership as things have shifted for us. So I like nothing set in stone. It works for everybody. It's amazing.
Month to month.
Absolutely amazing. Okay, Melvin.
Awesome.
Best place, where do you want them to go? We'll put it in the show notes as always, but Melvin, how do they schedule time with you? How do they find you?
Absolutely. So website is modewealth.com, modewealth.com. You can go to joinmelvin.net. It has 2 buttons at the bottom. One says join Melvin now, which would be if we have something scheduled, and just under it, it says schedule Melvin. So you'd schedule me, and then you'd go back there to join Melvin now once we've scheduled. So I did that to make it easy. So just joinmelvin.net to schedule me or to view my screen if we have a preset meeting. Phone number 971-273-7373. And yeah, that's basically it.
There you go. Knowledge bombs have been dropped in the best way possible. I just want to say thank you again, Melvin.
No, thank you, Julie. This is great.
Absolutely fantastic. And to all you amazing listeners, remember, as always, adventure belongs on the trail, not in your investing and not in your personal life. So if you are looking for a way to, invest wisely, make sure you reach out. If you're looking for a way to grow personally, make sure you reach out. We've got investment options, and I have some coaching slots, and I'm so excited about this women's coaching group that I've started with my friend Sarah, because it is such an incredible opportunity. So if you're a woman and you're listening and you're like, wait, I want to be in this women's coaching group, it will rock your world. I promise you, it's extraordinary. So make sure, shoot me a message, and all of that is in the show notes. As always, live big, love bigger. A lot of people missed out on my recent offering because they simply weren't on my investor list. Being on my newsletter list won't provide you with access to the deals I have. This is because 506B regulations require you and I actually discuss your investment goals before I can show you the deals I have. So head over to 3 Keys Investments and schedule a call.